Khare is joining us. He's Director of Research at William O'Neill, India. Vipin, hi, good morning. Thanks for joining us. Of course, we all know that there's going to be a rate hike cycle from here on from Fed. Whether it's 7 or 8 is perhaps, anyone's guess. But your thoughts on how to approach, portfolios in the current global environment?
Good morning, Anuj. Good to be here. Yeah, you're right. Most people are expecting a 25 basis point hike. But I think the hike in itself is not the issue. The reason why markets are tough is because whenever Fed unwinds the balance sheet with a rate hike, that leads to pressure on the markets. If you look at the 15, 20 large markets globally, almost 75-80% of the markets are below their 200 DMAs. Some of the markets are as much as 20 to 25, 30% of their highs. In that scenario, I think India has held up pretty well, around 10, 12% of highs, and not really as badly impacted as some of the other Asian peers. So globally, I think concerns are similar across countries, whether it be US, developed markets or emerging markets. Most people are worried about inflation and supply chain issues. And I think that is where companies that are able to pass on the hikes are seeing stable margins and getting rewarded. And companies that are not able to take the price hikes are seeing a steep erosion in margins and kind of falling below the 200 DMA. So I think that is what investors would be looking for. Markets that are holding well, and within that, companies that are executing well.
Vipin, hi, good morning. Do you think COVID could be another risk for the market because of what's happening in China, the trade disruptions over there? It seems to be very small at the moment, but do you think that could be a risk for global equities?
Yes, I think COVID has been there. It remains a risk. But more than that, the disruption it will cause, even though the numbers are small, the lockdown is pretty severe, and that will disrupt supply chains further. So that is going to put pressure on execution for managements, and that could already, supply chains are already under pressure because of everything that is going on in Europe. And with China seeing these kind of lockdowns again, that is something most people may not be prepared for. And hence, yes, could put pressure on the supply chain.
Well, Vipin, morning. There could be challenges going ahead, and there will be, some bit of gyrations that we could see. But, for the Indian economy, consensus is that we should do well from here. We should be on recovery path. In that context, the banking names should do well. What's your view on the banking space here in India and the financials as well?
So, it really depends on who the investor is. I think for retail investors, what we'll say is stay away from bottom fishing. Anything that is below the 200 DMA, approach it very carefully. Some of these large banks are below the 200 DMA. But having said that, franchises like HDFC, they are world class. And for institutional investors, I think it is really a good bargain because HDFC doesn't stay below the 200 for a long time. Apart from that, there are some of the other names that are holding up. But I think large cap banks, obviously there is some slowdown in growth and these concerns are there. But I think they should recover pretty soon. And I think the institutional investors will look to start building in positions because of where they're placed.
Okay, now one space where the stocks are about 200-day moving average, Vipin, is IT. And, Infosys, of course, has been a strong stock, but some of the other stocks saw steep correction and now bouncing back. What would be your preferred picks here?
So I think you have obviously the large cap IT names. You have places like Tata Elxsi that have held up really well. Persistent is another name that kind of shows up. And not only IT, Anuj, you have healthcare that is doing well. You have Sun Pharma and Cipla that have held up really well in this correction, even moved up. Within consumers, you have names like Varun Beverages and Page Industries that has really done well. Utilities, you have Tata Power that has held up. Indian Energy Exchange is something that has really taken support at the 200 and bouncing back. So I think all these names that have not gone down have double-digit EPS growth, are above the 200, maybe even above the 50 in some cases. Those are really good places to look for retail investors if they are not very seasoned. Seasoned investors obviously have more tolerance, have the ability to buy even if the stocks keep falling. So I think the large cap names, even if they are below in some of the other sectors, below the 200, I think they're okay.
Just one final question on, the space that has been hit quite hard because of rising commodity prices, and that's FMCG and the whole consumption basket. At any point, do these stocks become a buy for you?
I think some of the names are pretty good, but staples obviously did well for a bit. Oil price has come off and most of the commodity prices are falling. So I think it's more of a wait and watch space. India has gone from a place last October where 90% of the stocks were really holding up well. Now 50% of the stocks are below the 200. So no need to hurry, as Anuj was saying. This market will give you indications. If the market holds up, retakes support, and kind of doesn't make new lows, then these stocks will obviously heal and present opportunities. But nothing that stands out as of now.
All right. Final question, Vipin. Then I'm not sure whether you track the life insurance space. So we're waiting for the LIC IPO, and you get conflicting views whether it's going to drain liquidity out of the system, or it's going to be that Maruti moment that we saw in 2003. Obviously, the size is much larger. But any view on insurance stocks? Some of them, have drastically underperformed the index, the listed ones.
I think large companies that are sound are obviously key events that the market waits for them to get listed. Unfortunately, the market has come off a bit. So I think they're doing the right thing in just waiting and watching and seeing where the market goes. I think it will definitely come back if the market holds. But otherwise, I think with LIC getting listed, people will move away from the smaller players and keep some ammunition to invest in that. And I hope that takes place because it will be a really big event, and I think that is needed.
All right. Well, thanks a lot for joining us and have a great day. Thanks for giving us your views on the market. Let's slip into a quick